Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Welcome back, everybody. Hope you guys had a great trading week. We had some great opportunities this week. Looks like some of the markets are opening up, so hopefully you guys had a good week. Oh, yeah, love Charlotte. Yep. Great. One of my favorite places to visit, actually. So, yep. All right, everybody. So, as usual, we have hey, Ryan, how you doing? Ryan, nice to see you. So, again, give me the thumbs up, subscribe to the channel, doing all that good stuff. Also, if you want to subscribe to the newsletter, I'll be writing that tomorrow morning. Yeah, right, Dennis. Yeah. And I am having so again, I'm having a class next Thursday I had a few of you, and again, I get a bunch of views afterwards. So you guys know if you want to sign up for the class, that would be next Thursday, options class. I'm going to be going through some basics and getting into a little bit more. So with all that, and I also have the 5-day free thing going on still. I have some people take advantage of that, and they've actually been doing really well. Yep. So in any event, let's get started. So let's start off first of all with I always like to tell you guys that I am all about results, about tracking what we're doing, and always about forward looking, not backwards. I know a lot of people, after the fact, it's great. Oh yeah, look at what a big winner I had, blah, blah, blah. But if you guys have been watching this channel for I've actually going on now, I just started, gosh, about a month ago, I guess. So I've been doing maybe 6 or 7 of these. I can't even count now, but think about all I've been talking about, anticipating turns in the market and how they played out. So it's one thing to talk about after the fact. It's another thing. And so with that, remember last Tuesday, I'm going to recap if you guys were with me last Tuesday, and a couple of things, and then we're going to get into it. Pull up your charts, everybody. Please, everybody, pull up your charts so you can kind of go along with me so you can see what I'm talking about. Again, I find it more educational than me just showing you charts. If you guys can follow along, I think you get a lot more out of it, and so on. So first thing I talked about was the dollar index, right? Remember that? I kind of emphasized to you guys, we had the ECB, and I gave you guys a level on the dollar index. I don't know if you missed it, go back and check out the last Tuesday's YouTube channel. 110.73, right? You guys remember 110.73 to 112.10. We came right up there after the ECB and have dropped pretty good off of that level. Also, I made mention, I don't know if you guys are looking at that. That's a weekly distribution area, or supply, as you would call it, right? On the dollar index, that's the DXY. Yeah, Bill, you mean for the options class? Yeah, for sure. And listen, Bill, if you have any issues with whatever, just ping my support or contact me directly. Okay. I'll get you hooked up, yeah. So don't be shy about, contacting me directly via support or at transparenttrading-solutions.com. Just, okay. Yeah. I'll hook you up. Okay. All right. Let's go back to this. And so what happened is, and also I mentioned the euro. We actually have a trade set up in the euro right now. We didn't get into it. I think I was mentioning some setups, but the also, I don't know how many of you guys were able to catch some of these pops in the currencies. Remember we talked about that. So as the dollar fell off hard, all of the currencies. Dennis, I simplify everything. Great question. So for me, it's keeping it simple. Options don't, I think a lot of people are intimidated by options. Uh, but you don't need to be intimidated by options because if you, yep, no, no. We also do some spreads and stuff, but you got to understand the basics first because if you can't get past that, then you can't do the rest of the stuff, right? Oh, nice, Robert. Good job. Yep. Um, yeah, Bill. If you were intimidated by options before, you're gonna love it because I keep it super simple. You don't have to be intimidated, actually. And you guys know I love options. Options are a great alternative to catch some of these bigger moves. In fact, we're still long wheat. We're still so we're long wheat. We covered our UNG position, by the way. So we did cover our short in nat gas. We did catch. Remember, I've been talking to you guys about USO and catching the oil. We actually got into oil. We did get into USO. Um, if you guys want to pull up the chart of USO, I can give you exactly where we got in. 67.59 is where we got into the USO. Check it out. That's the symbol of the ETF that tracks the oil, right? So we got in at we pretty much nailed the bottom on that one. In fact, we closed right around 71 today. So we're doing well on that one. And I did kind of give you guys a heads up last Tuesday on that, right? So we did catch that. We finally got filled on that. Oil, as you know, also came down to 82 and it's rallied pretty hard. We on oil, the oil futures contract, it's rallied almost almost $7 off the bottom already. So we're right at where it broke down from at 86, 87 on oil. So we need to push through that. If we can push through that, I think we got a shot at probably the mid 90s is where I'm targeting. Also, TLT, we did cover TLT, and I did put on a new long position in TLT, just so you guys know. So I did buy I did put on a new long. This is a straight. The other one was kind of a volatility position in TLT, but this is a straight bullish bet on bonds. I do believe we're going to get a nice bond rally coming up. We have CPI on Tuesday. So just real quick, we have CPI on Tuesday, which is going to be a big deal. And we also have a big grain report on Monday, a big grain report. So, we did actually really well with wheat today, too. You saw that wheat taking off. It's got to break 8.5, though, on wheat. Sorry, I'm all over the place today, but we had a pretty nice day, and I'm a little psyched up right now. So sorry. Yeah. Eight. It looks like eight. Our prior high on the wheat was 872. So we're right there. And look at that big chart of wheat, weekly chart of wheat. Looks like we're on the cusp of breaking out. And that grain report on Monday, we'll see how that plays out. So that's kind of just updating you on our positions at TTS. Okay. And I got some trades set up on the euro and futures. And now that so let's get into the S&P, right? First off, you guys should be trading in the S&P in the December contract. We had rollover. Now, if you were just day trading S&P or whatever futures, you could still do the September even up to today. But starting on Monday, for sure, you got to start trading the December contract. Okay. So that kind of skews a little bit of the chart. Yep. Typically, if you remember, typically I like to trade the September or the expiring contract up until Friday. I know technically rollover is Thursday, but so unless you're going to put on a swing position. So any swing position, I actually talked to my members this morning, any swing positions, you got to start looking at December. So if you were going to just kind of a short-term trade, maybe day trade or whatever, you could have been fine just trading this September. In fact, on the September, I gave you guys that 4,100 level, but now that shifts because of the new contract month. That level that I'm looking at now is around 41 20-ish or so. That there's a base drop in there. And now that the VIX has kind of come full circle right back down, it's sitting at 23. So I would prefer it to. That's correct, Dennis. I would prefer for it to the VIX to come back down again. And what happened this last couple of days, I think I also mentioned, if you watched the recording on Tuesday, the YouTube, I kind of hinted at the fact that rates were up, the dollar was up, and the stocks were resisting the selling. Remember that? And I was kind of hinting at that we could be setting up for a pop. And also, what side of the boat was everybody leaning on early this week? What side of the boat was everybody leaning on? Bearish or bullish? What do you think? I'll wait for your response. Yep. You got it, Ryan. And you know what happens with that? Man, I always tell you guys, be careful with it, right? And so this is catching. So this last couple of days was essentially everybody. I think a lot of people got caught off sides. And market dynamics means when the market starts going up, as we know, shorts feel pain when the market starts rallying and then kind of feeds on itself. And I think that's actually what happened, right? So if you're wondering what the heck happened, I think that's what it was. But now, so if you exactly, Robert, remember I gave you guys that. Were you in here earlier? I just mentioned that from last week, from Tuesday's session. Yep. So now we are almost kind of in no man's land. If you, again, remember I mentioned this, now we can actually pinpoint to the this week's low, right, on the S&P. And I'm still going to reference the September contract for now. Starting on next Tuesday, we'll talk about this. But, this 3,900, real simple, right, against now the you could even make a point to the let's call it the Jackson Hole drop or whatever, right? The Fed speech drop, which is around 4,200. So relative to that, we're kind of in no man's land because we're again smack in the middle of that move there. There's a level on top of that would probably be the ideal short again, and it's going to be interesting. CPI. Yep. Yeah, CPI Tuesday is going to create some volatility. And, it's interesting because everybody's expecting a, lower CPI number, correct? And so I think that's already kind of baked in the cake. The difference now, again, remember that the market feeds on certainty, and when markets are uncertain, that's when you get volatility and the market sell off. And another rationale for why the market had rallied or is rallying, yep, hi Jim, is very simply, remember we had the ECB on Thursday, and then Powell made his last speech before the next Fed announcement, and essentially reiterated his kind of hawkish views, and essentially we're gonna get the job done, blah blah blah. Bottom line is 75 basis points are coming, correct? Now that the market has already dialed that in, yep, that's right, Dennis. Now that the market has kind of already dialed that in, is that uncertainty taken away? And if you're trying to figure out, well, why did the market rally? Well, now we already know he didn't change his tune. It's already baked in the cake. And now we can move forward and rally. What is going to be, again, the could upset the apple cart again is going to be the CPI. Now, here's the setup for the CPI. I think it's a given that CPI is going to be lower than last month. That's almost a given. Yeah, you guys agree with that? But here's the thing. How much lower? Right? If it's like not that much lower, that actually could cause another sell-off. If it's like off the cliff low, like it goes from like 8, remember the last reading was 8.5 on the CPI. If that comes in like at below 8 or like in the 7s, you're going to have a monster rally. In other words, if it's way, way less than even the expectations are right now, then you'll have, you'll have a monster rally, and bonds will rally like crazy too. So we'll have to see. That's on Tuesday. And in fact, I'll be with you guys next Tuesday after that. So we'll see. That seems to be like that's the setup right now. Okay. Does that make sense, everybody? So the fact that, and by the way, there's no Fed speakers able to talk now. This is their quiet period because they've got the next Fed meeting. So nobody's going to be out talking about anything. They're not going to be jawboning anymore. So keep an eye on that. Okay. All right. So let's finish up real quick. So really, rollover. I think we're going to probably on the new contract month. Well, Dennis, it is, but do you think so? Again, I actually had this discussion with some of my members today. Largely it is, but does your opinion, in other words, do you have to have a, I was actually talking to my members today. It's like, yeah, 8.5 is who wants that? And is that still any good? Even though, again, all the claims and all that kind of stuff. But see, here's the thing. That kind of opinion and kind of supposition and whatever, your personal views and whatever, where I'm going with this, right, Dennis? That if you hang on to that while you're trading, that is going to impair your judgment to be unbiased when you're trading, correct? So in other words, you can't bring that stuff into your trading. You get my meaning? Because that's getting a lot of people into trouble right now, if you think about it. Right? So I had that discussion with my members this morning, in fact, right? Even though you think it's ridiculous that they're saying no inflation, that it's, 7.5 is blah, blah, blah. Do you care if you're long the market and it rallies 300 points? Do you care about that? Or do you want to be long the market when it rallies 300 points or 100 points or whatever? Does that make sense? So again, I want to caution everybody, trade the charts. Don't bring any of that stuff into your trading. And again, I've been saying this for the last month or two. What happens if you label yourself bear or bull? Is that getting you in trouble here too? Right? What happens to all those bears in the last 3-4 days? Okay. Buying low and selling high means when the market starts rallying hard, now we're going to start to short it again. And then by that time, probably everybody's going to start getting bullish again. I know it's kind of weird, but that's the way the markets operate. Isn't that correct? I get it, Dennis. I get it. All right. Okay. So let's move on. So let's just, I'm going to just go real fast now because I'm going to run out of time. We got diverted here a little bit. So very similar with the NASDAQ. The NASDAQ actually hit that 12K, had a monstrous rally. Now we're going to come up into that 13K on the new contract. That could be another selling opportunity. So check out your charts on that. Russell, I've been talking about 18K. And now we're also, so all this rally now is bringing us back up to some really nice levels to short against so you know how when we're low, we want to be buying. And now that we are rallying, now how hard do we rally and how far do we go? now I'm going to start looking for shorts. Does that make sense? Because I still think that, you know, this is still going to be, I don't foresee the market, you know, just going out to new highs, not with, you know, the Fed still tight. Next year, you know, we'll check it out by the end of the year if they're done with their QE and all that, QT, I'm sorry. Then the markets could really take off. I think that's when you're going to have the markets really maybe attack the new high. And I wouldn't be surprised if we have a new high next year, by the way, just so you know. Okay. But in the meantime, you got to be trading a range, right? You're going to be trading massive ranges right now. Does that make sense? All right. Now on the bonds, real quick, let me just move really fast. The 10-year is the key. Also, I've been talking about the 10-year. Now, what's interesting today is, you know, if you look at your 10-year chart, it's kind of been building a little bit of a range as well, 116.24 down to about 115.17. Below the recent low is 114.17. Watch that 3.5 yield on the 10-year. I think that's going to be, again, the CPI number. If we get a little bit slightly higher than expected or not that great of a difference in the numbers in the CPI, you can have bonds selling off, and that would, again, in fact, also push stocks lower. So it's all going to be predicated on these rates. And as you can see, the 10-year is kind of just bouncing around right now, still trying to find out what the next move is going to be. But I do suspect that we're in the midst of a strong bond rally coming up here. Could I be wrong? Of course, but you know, we'll see. So breakout on the 10-year is going to be around 116.26. Okay, if you're a breakout trader, but I'm already positioned long, as I mentioned. I'm already long TLT calls, so I'm already expecting a move higher in bonds. I've already taken a position. Okay, we talked about the dollar. Where's the net? So here's the thing on the dollar. It's pulled back pretty hard. There's a pivot low at 107 and change. The next level is much lower. And again, as I mentioned last Tuesday, how deep this pullback is going to come is going to be interesting. Also predicated on the CPI. It's come a long ways. One of the things also is in the media, everybody now is finally starting to talk about how strong the dollar is and how it's affecting multinationals and so on and so forth. In my estimation, in 30 some odd years of doing this, when you finally start hearing any kind of chatter in the financial media about any kind of market, that's usually the end of the move, right? So the fact that they're finally getting around to talking about the dollar, which whoever talks about the dollar, right? That leads me to believe that we're probably closer to the end of this dollar rally than we are to any further upside. Okay, so with that in mind, look at all your currencies, right? So in particular, the euro, obviously, we got some pullback areas there. The pound. So look at all your charts. They look all similar. They had a nice pop. That pop in the currencies left a nice accumulation level across all the currencies. So all you got to do is just go across all your currencies. Now, again, I'm talking about futures now. I'm not talking about pairs in the FX. I'm just talking about because they're all pegged against the dollar. In particular, the Aussie has a really nice level. Canadian. And look at the Swissy. You talk about some moves. How many of you guys trade the Swiss franc on the future side? Right? Man, you talk about some nice movement. Check out the Swiss franc if you can. I mean, it's a big contract. It's still 12.50 a tick. They don't have half ticks. Most levels that you're going to find on the Swiss, you're going to be anywhere between $300 to $500. If you can afford that, I would highly. Hey, Gallo, you're trading the Swissy. Are you a Swissy man? Yeah, look at the moves on that thing, right? Yeah, love the Swissy. Yep. Okay, so those are the currencies. Silver. Let's recap. Silver, still like silver. Still don't have the setup yet. One of the things that uh, uh, did create a nice move here, which I haven't really talked about, and in fact, I set up a trade today in copper. Look at the copper chart. With the latest move in the dollar, the copper really is setting up nicely. Um, I actually have a trade set up in the copper market, and I'm using actually CopX, ETF, and I will be using the copper futures market as well. But for now, type in the symbol COPX if you want to trade copper via, like, how we talk about UNG, TLT, USO. If you want to trade copper for the long term using an ETF, COPX. Okay, I'm gonna actually type it in the chat here. COPX. Check it out and I'll be talking about this in our stock and futures class. I'm sorry, in our options class coming up. So if you guys want to join me, that's next Thursday at 11 Pacific and I'll be going over some of our setups there. Okay. And then lastly, we know about oil. I already talked about that. Nat gas. I covered Nat gas, the put position. Notice it's hovering around 8. I'm sorry, right around 8 for the last pretty much this week after it dropped. Remember I mentioned that I was in there. So I covered that. And next week, I think we're going to reset this up. Watch that 750 area in Nat gas. I decided to cover it because it doesn't seem to be breaking. And obviously with hurricane season coming up and what's going on in Europe, we could have another pop. And the message to the market is telling you that this thing doesn't want to go down right now. So that's going to be interesting. And then oil also rallying hard, which you did nicely in that one. I did mention, just to repeat, we got long USO at 67.59. So check out the chart on that. And these are, by the way, if you join me on in the webinar, or if you want to come in, I will. We track everything. We have a trade tracker. We basically for all our members, we track every single trade. We also keep a P&L and so on and so forth. So if you are interested in looking at our P&L, give me a ping and I'll show you the website and everything. We have to track we have to be accountable for every trade that we do, correct? Or else you're just kind of playing tiddlywinks. I was just kidding. All right. All right. Lastly, grains. I think I just, so let me wrap it up. I got to get out of here. Next week, big grain report on Monday. If you trade the grain markets, hey, Michael, good to see you again, my friend. So we got a big grain report at noon Eastern on Monday. So if you are in the grain markets, make sure you're aware of that. Make sure that you understand the volatility that comes after those reports. I've seen, if you guys have been if you guys trade grains, sometimes not lately, but in the spring, remember we had some limit moves on some of these grain markets. So be careful. So just heads up on that. That's at noon if you are trading in the grain markets. And then the CPI, right? The CPI on Tuesday, that's going to be a big one as well. Okay. And then, so that's it. And then, again, if you want to subscribe to the newsletter, you want to join my class, my options class on Thursday. If you want to come into the website with me for a few days for free, no obligation. Also, just hit the link below. Give me a thumbs up, subscribe to the channel and all that good stuff. Yep. Gallo, I have documentation for everything. If you want to ping me, I will be glad to get on a Zoom call with you. Okay. Yep. Yeah, that can be disastrous, Dennis. Yep. Okay, everybody. Listen, thank you for joining me again. I'll see you guys on Tuesday. Hopefully, this is being helpful for everybody. Again, be careful out there for the grain market, CPI, so forth. Uh, so I'll see you guys next Tuesday. Have a great weekend. Stay out of the heat, and I'll talk to you then. Okay. Take care, everybody.